Good morning, everyone. It's Chris from Solstice ATR as well as Excel. You can find me on Twitter, Instagram, Discord. We use this information, adaptive algorithm, for trading the side market, up market, as well as the down market. Remember, this is educational. We're not a broker dealer. Past performance doesn't give us any indication of our future results. We only look at historical just for what the past has given us, but the future can change day to day. We want you to understand that. Trade what the charts offer you. If you like this video, hit the thumbs up, hit the like, subscribe, give us your commentary on either side, whether you like it or not, and pass it on to your friends. Let's go to the next slide. I have here put the New York Composite. The reason why behind it, this signal has occurred 4 times in the S&P 500 as well as the Dow and the New York Composite. The reason behind it, every time we have the cloud or the averages and the momentum from consolidation to expansion and the resets, usually these are set up on a timely manner. If you can see historically in 1975, 1978, 82, 89, 1991, 2003, 2009, 2016. This is after we had a reset and a recession of consolidation, breakdown, consolidate, get out of that breakout. Usually it takes usually a short period of 3 months up to 3 years when we are in a downtrend, but the long term usually goes for longer. But sometimes we get chopped along the way. That means that we are getting consolidation, trying to make a decision in which way the sentiment is in the overall market. Use technical in your charts. Don't be biased. Trade what's given to you and don't let them move past you because you're questioning whether it's going up or going down. It's more importantly, you protect your capital and do what's right. I'm using a resistance and support RSI here, very simple one, which is usually between 70 and 30. We have expanded it here between 20 and 80, and we use Fibonacci numbers, which is the 61.8 and the 38, to find the breakout coming above or below or coming back to the midpoint of it. Usually the sentiment does consolidate around the range of the 50 for a breakout above the 61 to 78 and below the 38 to 23. We look for the extremes at the lows, extremes at the high to trade what we see in relationship to a linear regression uptrend or downtrend. Let's go to the next slide. I have here the NASDAQ 100. I have the positive as well as the negative drawdowns from the 1985 till 2009. Remember, 1985 was the NASDAQ when it got introduced to the market in the tech sector. In this video, I'm going to cover some technicals, one or two. Keep an eye on them. And we do not trade history on the charts. Historical is just a reference point. You want to be able, even if you draw a Fibonacci or a channel or support and resistance and draw it back, we want to make sure when we are in the trade, we have no bias and we know where our stop is, where our target is first and second. Don't turn a winner into a loser. Take a snapshot of this chart and please remember that there can be drawdowns along the way. Let's go to the next slide. In this next slide, I put the S&P 500. I use the S&P 500 sectors, which are the 13 sectors in it, and I put those three up the top, XLY, XLC, and XLK. These have moved the most out of the S&P 500 sector. The rest have been wandering around back and forth between positive and negative, including the financial, the biotechs, the real estate. I don't want to go into them in detail, or the interest-bearing accounts such as the banking sectors. We can see after the COVID, I left this SPX with the information on it. Usually after a year or so, I reset my charts to the right side because I'm looking for patterns on the right. This was a February COVID high in the gap, the breakdown, the rally up in 2020, the consolidation before the December. That was our January low. We rallied till no December. We had in 2022 a high. We reset lower. You can see the lows and highs. I marked them. And I put since the January low and the December of 2022 and January and March low, Here we rallied higher after the Silicon Valley, and we're pushing higher towards the March. If we are in we are in a linear regression uptrend on the weekly. Remember that. But if it wants to continue, it has to break the 78% in order to get to the 100. If it doesn't, it reconsolidates and comes back in. That is okay. That is a healthy move to be able to purchase stuff at a lower price. We can see that the RSI is on an incline going up, but it's consolidating in the last couple of weeks. It doesn't mean it has to break up and continue, but it can come back and reset before continuing higher. Let's go to the third slide. Remember, this slide tells you where you can find us, where you can get in contact with us, and let us know what your opinion is according to this video. Here I put the Dow Jones Industrial Average and the S&P. Usually when we consolidate, go back and forth, you can see the range, it stays in range, retests the prior highs and bounces off. Retest the prior lows and bounces off. We came back to retest the consolidation and the breakdown. There's a gap here. You can see it. We retested it. Almost didn't fill 100% of the gap, but if I get a box here and I do this, I grab this candle here between the two and this one here, there's a minor little gap here. If I extend it to the right, let's say till 2023, it'll show me that there is a cap that's never been retested. If I zoom in this area on the weekly chart, that's a professional gap right there. And we continued higher. We retested. That was the October 10-10-2022, the rally up, the December low for the combo on the S&P and the Dow. We had the March low after the silicon. We created a shoulder, a head, and a shoulder, but we've been range bound here. If there's going to be the sentiment and changes in the market, I want everyone to pay attention to the overall market. When I put the weekly here, you can see the time frame I used from 01/1970 and the S&P till July 15, 2023, which the market closed on that Friday. So remember, we can go historically back according to the overall sentiment, because if I go back to the SPX alone here and I put it on its own, I hit the button, I can go as far as I want, all the way back till the 1970s here. But if I want to look at the prior to that and go further back, I've got to look at the 23s, 1930s, and so on, when we consolidate and break out, consolidate and break out. So these are the reasons why we use this data to help us along the way to know where the levels are. So trade what you see, not what you think. Let's go take a look at the micro NQ. And the reason why on Friday there was a sell-off, I'm going to take that Fibonacci that we did on the weekly. You can see it, remove it. We're going to go down to a faster time frame this time. We're going to go time frame, intraday. We're going to use a 20-day range, and we're going to put it on the 4-hour, okay? That would be giving us enough information on the chart to be not biased to either side, because we consolidated for a couple of weeks. You can see this height from here to this low. We went back to that, retest this area. We failed. We consolidated in this range, correct? We found support and we bounced off sharply. On Friday, there was a look above on Friday and we sold off. The reason behind that, a lot of the tech sector has run very sharply, like the XLK. What we want to do is pay attention to Amazon, Apple, NVDA, Tesla, Netflix, and all those large tech companies with the small cap in relationship where the RSI is at above extended. If you drew a straight line up here, we eventually broke down and we got that nice short into the close, which was a great short from the morning high, from the open, the rally, look above, fail, and come back in. So how do we look at it? This was our Sunday low, which is Monday, to the high. You can see the Fibonacci drew resistance and support. It's an automated that we built, 50%, 61 and 38. I don't have the 23 and I don't have the 78. So if I want to draw this, what I want to do, I want to go get a measuring tool. My measuring tool goes from low to high, and you can see it. But if I want to draw it backwards to know where my numbers are from negative to low, this is what I do. I will extend it one more day to the left. Remember, this shows 710. We're going to go to 79. So we're going to go one day back, correct? It shows 8 a.m. That's fine. We're going to push OK. We can see where the Sunday's low are and from Monday and the high on NASDAQ on the week. So once we are up in the territory of the 80% rule, usually if you look above and fail, you look for the 7861, which is a 38.2, and the 18 simple moving average. That green and red line, I use a simple moving average, which is an 18. I do not use a 20. We use a 50 simple moving average, 116 and a 200 SMA. The reason behind it, we want to trade the ranges from high to low according to the overall sentiment. You can see where the extensions are. I have 180 to 200 and the same thing, minus 82, minus 100. Sometimes we do two standard deviations. Sometimes we do one standard deviation. This is a regular standard deviation, but if I duplicate it to the bottom, that's one deviation, one to the top. But if it does it double, all you do is grab that fib, duplicate it to the top, duplicate it to the top, start where the 0 is at the 100, or start where there's 100, you bring it down the 100 to the 0 and extend it to the bottom, so you get the double extensions to the low, double extensions to the high. So if I want to look at channels, what I want to do in the channels is grab this low here to this high. That's a linear regression channel. If I duplicate this channel from here to here, you can see we are in a linear regression uptrend. If I want to know where the 50% is, all I have to do is duplicate the drawing, grab this channel, and I put it right in the middle. It's more or less giving me an overall review of the NASDAQ 100 where the midpoint is. If I want to know where the 38, all I do have to do, duplicate the drawing again, and I drag it up. I can eyeball it, and you can see this is called the linear regression uptrend or downtrend. Duplicate the drawing. I'm doing this on purpose with this chart to show you how to look at the levels in the overall market. So you don't have a bias, you know where your support and resistance are. This is your support. This is your resistance. This is your resistance, and it broke up, correct, above the 50. Look back down to the support, broke up, went to the high, coming back through. Even drawing it on a faster time frame will keep you out of trouble when you are trading those levels, and pay attention to the RSI in relationship to the overall market. So this is how you draw a chart and understand the levels. If you have more questions, please let us know, and it can tell you if I am going to be, you can see I have a midpoint for the ATR. My average true range is 220 points. It says 218 here. Let's call it 220. It was long and bullish in the morning. But if I change the sentiment to an hourly chart, 20 days, you can see how the sentiment changes on the chart. It's getting weakness. It's becoming short and bearish. If I come in to the 30-minute bar, similar situation. The trend became short, midterm short down, long term still up. On the long term, we are up, but we broke that uptrend channel. We came back, retested the consolidation of this breakout, retested it. If we hold, we hold. If we don't, we reverse back up. If the sentiment changes and breaks down, where is our consolidation? This area here before the leg back up. So this was the look below, come back up, consolidate, then we eventually broke up. So even coming back to this area, it's a healthy to see, but pay attention to the levels because things do change according to price action and time. So if you look, short term now is back to the upside on the 15-minute, midterm and long term on the 15 is in a downtrend. So we trade what we see, not what we think. And you can see the RSI when it peaked at 80, looked above and failed, draw a downtrend channel. It is in a downtrend channel. I hope this was helpful. Please, I don't want to go over too many charts today, but what I wanted you to know is trade what you see. Sometimes we have virgin control points. Those virgin control points are places where they never been retested. The POCs, value high and value low, in relationship to the consolidation. So when we trade, what we want to do is trade the chart that's in front of us. You can see what we did to the NASDAQ where the levels are. So if I go now to the micro ES, I want to do one more micro ES sharply. You can see this was the prior week's Fibonacci. So we can, or the measured move, I remove it because it tested the 180. So even if I zoom in here, you can see where that professional gap is still there. We rallied up for 5 days. We looked above and failed. Pay attention to the breakout at the 4,500. Does it find support or not? On the 4-hour chart, if I come into the 4-hour intraday and I go 20 days and I do 4 hour or even 2 hours, I want to pay attention to the overall sentiment. We looked above, failed, looked above, failed, retested this consolidation. We broke up. We are in an uptrend. You can see the auto trend is up still. If this is broken and cannot hold the 45.23, I am not biased to being bearish or bullish. We trade what we see. If we find support at the 38.2 fib, that's great. If it breaks through, you look for the 50. If it breaks through, you look for the 61 for reversal, because this was the consolidation. This was the consolidation, consolidate, break up. Coming back to it usually is a buy zone. But if things do change, your RSI change the trend on the 2-hour chart. And if it does test the 50 and bounce, that's great. If it breaks through, you look for the 38 for the first bounce, which would be the 61.8 fib on the charts. I hope this video was very helpful. Please check us out. Once again, at Solstice ATR. Get in contact with us. Let us know how we can help you and assist you in your education to become a better trader. Have a good week. I look forward to seeing you on Discord. Take care. Over and